Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we're seeing is more of the same. You've got this, I call it an AV type of a market. Looks like A's and V's on 15-minute charts. You go up, you come back, you go up, you come back. It's a very two-sided tape. It's the kind of tape that gets those that are very bullish very excited, and then it comes right back down. It gets those that are bearish very excited, and then it goes right back up. So what I've been saying to my folks all week is, I jump on the mic up above 2100, and when we get down into these lower areas and say, look, you've got to take profits. And then we take a look at the major levels, which we did yesterday, 2106, 2107. 2106, 2107 is a serious problem for the bulls. And for anybody that thinks that this is still a full-on macro uptrend 2013 market, I would say to you, you may need to rethink that, because the 2013 macro uptrend bulls would have busted through 2106 3 days ago, and we would be trading in the 2130s right now, with every short completely eviscerated, and we'd be buying dips every morning and we riding it out. Instead, I've got a long from down at 2069 that I'm really not willing to let go, because at the end of the day, it may just work out for the bulls. But at the same time, every time we press up against that 2106 area, I'm shorting. I just put something up on Twitter, to lay out how Jack and I got short again. That's 2 days in a row. We've been doing that, the same trade. From that 2103, we did 2104 quarter and woke up yesterday morning and took profits on that. We did 2103 half yesterday. I woke up and took profits on that. I took a third off yesterday. I took a third off this morning for 20, and now I've got a third left and I'm letting it ride. And now we're long from down here at the lows. You've got to play both sides of it. It's a great trader's market. You just have to be a little patient, because it's not giving you immediate gratification on entries. You've got to kind of watch it chop around a little bit, and then it goes where it wants to go. Where does it go from here? It should go back up, because that's what we've been doing. I'll be very interested to see what happens at the 9-day simple moving average, which is at 2088.5. If it demonstrates an inability to start to get through there, and we make a new low and break below the weekly pivot at 2079.60, then the bears can put together a fairly solid red day. Their target on any red day would obviously be the middle band, which is coming in today, at 74 or 75 area. What the bulls want to do is what they've been doing, which is allow these overnight drops to happen, come in, buy the dip, push it back up towards 2100. It's going to have to get over, a few layers of resistance, but for right now, the S2 area at 2082.58 was tested, and it held up on the last move down. You don't want to see that area lost if you're a bull. But my point this morning is this: it's a trader's market. It's a two-sided market. You can't get too excited about one case or the other, because neither side is able to push their situation to the point where they can take control of this tape. All that said, ultimately, we are trading above the middle band and below the upper band. So when these dips happen, like they did this morning, I will continue to buy them, because that's the baseline rule. It's still buy the dips, and it's served us well. If you look here, lows rejected, lows rejected. We'll see how the candle turns out today. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Live chart, audio, some decent setups, some great folks to trade with, and our number one priority is to keep you out of trouble. I will be back Monday morning with another webcast. Have a fantastic weekend. Trade them well, everybody.